showing resilience, and look at the recovery on Nifty 50. But what's the way forward for the markets? What sort of a data that is building up? Let's try to decode that with Dharmesh Shah, Head of Technical at ICICI Direct, joining us on the show. Very good morning, Dharmesh. And firstly, good move on the benchmark indices after that stellar run-up yesterday. A good move today as well. Where do you see the markets headed?
Yeah, good morning. Yes, definitely. I think so. The market seems to giving a follow-up to the yesterday's move. I think so. That is more important to look out in today's trading session, because if you look in last two trading sessions, we had a gap up opening or a positive closing, but the second day we don't see a follow-up happening to this move. Today we are seeing a follow-up happening to the yesterday's move. We believe, I think so, market seems to into more of oversold territory. I think so that is something, the one reason for technical pullback. Also, we have a meeting on 15th of US President Trump and Putin, I think so. The market seems to be looking for some bit of a short covering ahead of such a key event. And if you look at the FI shorts, they have been highest around 92% in the market. So it looks like, I think, just some bit of a short covering is panning out for the market. And we expect Nifty to head towards 25,000 in the coming weeks. So strong support placed at 200 moving average, which was around 24,200. And if you look at the market breadth, I think that seems to be also improving from last two trading sessions. So yes, things looks positive from the medium term, from the short term perspective, for a target of 25,000, keeping a stop loss of 24,200.
Okay, so that's the take coming in on where the market is headed. But Dharmesh, give us a sense of where you're seeing the broader markets. Because yesterday, while the mid cap was in line with the performance we saw in Nifty, small cap was lagging behind slightly. But also throwing some light on the kind of fund flows we've seen on the Amphi data numbers for the mid and small cap, they were looking very robust. So do you believe confidence is coming back? Is that something that you're seeing on the charts in terms of levels for the broader end of the market?
Yeah, if you look at the historical data of the broader market, I think so inside the structural bull market, 7 to 10% corrections are the normal corrections for broader market. And if you look in the current context, I think so the mid caps as well as the small caps have corrected something around 7 to 9% from their top. We believe, I think so they should take a support in the current corrective phase. And as we are moving towards the flag end of the earnings season, I think so next move should be more of a result specific. I think so where the earnings are really strong. And so focus will be definitely focused towards those mid caps where the earnings are too strong. So we believe, I think so going forward, I think so mid caps, small caps, downside limited looks from the current levels, as well as we believe, I think so the way the base formation seems to be panning out, maybe post September, I think so we should definitely see a mid caps and the small caps to be back in action. Maybe in the coming 1 month, we should see more of a stock specific to base formation for mid caps and the small caps.
Okay, mid and small caps, that's the take coming in. Today, of course, the trend is favoring IT. Dharmesh, what is your sense? Is there a trade here, or does it seem like it's really a dead cat bounce?
Aisha, it looks like a more of a, we remain to be more of a neutral to negative for IT for the near term. But the way things seems to be panning out, anything positive outcome in terms of negotiation in India tariff, US tariff, I think so that could be some bit of a positive for IT. But what we believe, I think so it's more of a technical pullback from the oversold territory. So one should not get jump into the IT sector as a whole. Wait for, I think so, wait and watch is something the approach right now for the IT. But yeah, in the near term, I think so if one want to play from the trading point of view, I think so it's definitely IT is something where one can see 4 to 5% upside in most of the stocks. But it's more of a short covering right now in the near term for IT.
Coming in on IT, yes, of course, interesting and good moves on the IT pack. But Dharmesh, the other sector that is doing very well and has been doing well since the last week is the whole auto pack. M&M, of course, is the top gainer now, followed by Hero MotoCorp. These have been the movers of late. But what do you make of the auto pack right now, and which are your preferred bet?
Auto as a sector, if you look, I think so for last 2 months, they seems to be more into corrective phase, except few. I think it's more for stock specific action happening in auto. Two-wheelers are doing good, but if you look at Tata Motors or Maruti, I think so they seems to be struggling at their current market price. So we believe, I think so M&M remains to be our top pick at the current market price, at the way the auto numbers numbers seems to be coming out for monthly for M&M. It looks like I think so the momentum still remains to be very strong for M&M. So M&M remains to be a top pick inside of the space where we expect I think so M&M to head towards 34.40, keeping at stop loss of 31.30. So M&M among the auto remains to be a top pick. Apart from that, I think so three-wheeler space, I think so the one where we remain to be positive for. Where again stocks like Eicher Motor, I think so the one where strong sets of numbers, stock has done nothing right now. It's more of a consolidation happening in this range of 54 to 5700. We expect, I think so, Eicher Motor
Snap that line. We'll get back to Dharmesh. But Dharmesh, good to have you on the show as always and join in with your thoughts. Holding up thanks to what the IT pack is doing. The broader market's looking okay. You've got LIC, you've got Titagad, SJVN, IGL. Interesting mix of names out there. And then, of course, L&T, M&M, Reliance are also cushioning the index right now. We'll take a break.